remember the first time I walked into one of those buildings. Young. The first time I walked into one of those buildings. Young. Ambitious. Convinced that getting close to where the money moved meant some of it would move toward me. But I kept watching what happened to everyone else inside the machine. They worked. They borrowed. They paid. They repeated.
Ready, set, go.
So I started looking for a different way in. The early years were not glamorous. Hauling material, negotiating in communities most investors drove past, losing sleep over deals that barely made sense on paper. But I kept coming back to one thing I could not argue with. People need housing. That truth was more reliable than anything I found inside the system. So I kept building. The first note I ever held changed everything, not the property. The note. This family was not going to miss this payment, because this was their home. The last thing a family stops paying for is the roof over their children's heads. That is not a financial theory. That is human nature. Monthly. Fixed. Contractual. The transaction ends, but the payment keeps coming. Month after month. Year after year. Regardless of what the market does. I did not build this because I hated the system. I built this because I understood it well enough to know I needed something outside of it. People need homes through every crash, every correction, everything. That is the foundation. Mobile Mailbox Money is where I teach how notes are created and how positions are structured.
It was here, in the quiet of the desert dawn, we finally understood what it meant to belong. This is the place.
Silvercrest is where accredited investors step into performing positions already sourced, structured, and paying. I spent years building outside the system, so when people were ready to exit it, there was somewhere real to go. This is that place.
Welcome back to the Mobile Mailbox Money channel. I'm Alden Guajardo, President of Silvercrest Opportunity Fund, Vice President of Win Mobile Homes, and founder of Mobile Mailbox Money. We got 2 books on Amazon. We've done 400 doors, about $30 million in vertically integrated affordable housing. Manufactured homes here in the Arizona market. Appreciate you all being here today. We do this for you guys, put this stuff out for free in the want for transparency, trust, and additional transaction base. If we can't get a couple deals going, raise some capital, it's all for nothing at the end of the day. So we've had a fair amount of transactions over the past 3 weeks. That's numbering about $800,000 in sales as well as note transactions. Got my cohorts here today on the channel here with Sean Gibson. We'll start with Sean today. Sean, if you could just introduce yourself for the viewers that don't know you.
Absolutely. Hi, this is Sean Gibson here with the Mobile Mailbox Money and with Mobile Homes. I'm actually a note specialist helping our note buyers accrue notes with us. Also, I could call myself kind of a jack of all trades, helping with mobile homes as well. But another thing is I'm an investor. So I think just like you guys, looking at the returns, and this is a phenomenal opportunity. That's why not only an investor, but I joined the team. So always need to help our investors.
Thanks, Sean. We got Sunny Finkel, Sunny Princess of Notes, the Note Queen. Appreciate you being here today. Maybe if you could just introduce yourself.
I'm Sunny Finkel, and I am the Investor Relations Specialist for Mobile Mailbox Money and Silvercrest Opportunity Fund. And I am also the Loan Compliance Coordinator with Win Mobile Homes, assisting our agents in ushering their deals to the closing table so that we can generate more of those notes that you all are investing in. I help with due diligence. I help with acquisitions. I've become somewhat of a specialist in the self-directed IRA department, so I'm happy to give you a hand if you need it in that department.
And is that Serena on here as well?
Yes, I am Serena Guajardo, Alden's sister. I help with sales and acquisitions and pre-qualifying all the buyers.
So Serena is actually our executive sales associate. Serena came on like 2 years ago. Serena, how many mobile homes do you think you've transacted in the past 2 years?
That's a great question. I'm not sure, but definitely confidently closing a deal a month for probably the past 4 years. So you can do the math on that. Sometimes more in peak season, but a lot of good things to come.
Appreciate your interaction today. You know, the messenger is open on the Zoom here. It's one of the benefits of joining the meeting. So Rodney, appreciate you checking in, saying what's up. Thanks so much. You know, people do business with the individuals they know, like, and trust. And how do we facilitate that? We do this every week, 1 o'clock Arizona time. Lot going on. You know, we've got Azria's meeting here on Monday. Jeff Watson, prolific private lending attorney and individual that touts becoming the bank as an attorney, will be actually in attendance and giving a master class on how to become the bank, similar to what we provide, but the guy's an actual attorney. So definitely a must attend. That's here this Monday. If you're in town or you need a reason to come in town, you know, that would be a great one. But today I want to start completely different, not with manufactured housing, not with notes, not with seller financing. I want to start with a simple question. Where does capital go when everything becomes expensive? Because that's really the environment we're living in today. For the last decade, investors have been conditioned to believe that if they simply bought enough stocks, enough real estate, enough index funds, the market would eventually solve the problem for them. And for a long time, it did. Asset prices went up, interest rates stayed low, liquidity was abundant, multiple expansion did most of the heavy lifting. But today the environment is completely different. Stock market valuations remain elevated. Commercial real estate is dealing with refinancing pressure. Multifamily operators are becoming squeezed by rising expenses and higher debt. Cap rates are adjusting. Exit assumptions are changing, and suddenly investors are being forced to answer a question many have never had to answer before. What is that? What am I actually being paid to own this asset? What am I getting paid monthly to own this investment? Not what it might be worth someday, not what the market might pay me later. What am I being paid today? That's a very different question. And historically, when capital begins asking that question, private credit becomes extremely attractive because private credit doesn't start with appreciation. It starts with a payment. A contractual obligation, a borrower, a lien, a payment schedule, a piece of collateral. And that's what I want to discuss today. While many investors are trying to predict where the market goes next, we're focused on building predictable cash flow streams, not speculation, not forecasting, real cash flow. Let's look at our current pipeline today and kind of dive into some specifics. We actually have about $300,000 actively represented across performing notes, construction lending, and seller finance originations. Those positions are producing approximately $3,300 a month in contractual borrower payments, not projected appreciation, not future resale value, actual payment streams. And beyond that, Silvercrest remains about 1.5 in performing seller finance notes backed by Arizona affordable housing. You know, why are we investing in affordable housing? There's a lot of different avenues, you know, to provide a much needed solution currently to one of the biggest problems in the nation is literally a generational opportunity. Because regardless of what happens in the stock market, regardless of what happens with office buildings, regardless of what happens with luxury apartments, people still need affordable places to live. In fact, the affordability crisis may be one of the most durable investment themes of the next decade. Millions of Americans can afford a payment. Many simply cannot qualify for traditional financing, and that gap creates demand, and demand creates opportunity. Our role is to structure capital around the opportunity. Sometimes that means construction lending, sometimes that means origination on new seller finance notes, and sometimes that means acquiring a seasoned performing asset via being the bank in paper. But the common denominator is always the same. We're not buying volatility. We're buying payment streams. We're not trying to guess what an asset will be worth the next year. We're structuring what it pays this month. That's a very different philosophy. And I believe over the next several years, as markets demand more selective and capital becomes more disciplined, investors will increasingly move away from speculation and towards contractual income. That's why we focus on first liens. That's why we focus on affordable housing. And that's why we focus on seller finance paper, because at the end of the day, markets fluctuate, headlines change, interest rates move, but a performing borrower making a payment on a first lien obligation backed by a real asset is a remarkable thing. And sometimes the simplest investment thesis is the most powerful. So let's kind of start the meeting today, talk about a couple of the deals here on the live deal flow market. Remember, the chat is open. And as I played last week, these notes are likely going to get absorbed into the fund outside of this meeting. It is a first come, first serve equation. So just know that time is of the essence. So let's start diving into a couple transactions here. This is lot 200. Lot 200 in Fountain East off major cross streets of Broadway and Wrecker. This 2-bed, 1-bath, I think it is. Lot 200 is a 2-1 here. We got some people trickling into the meeting today. Appreciate you being here. Lot 200, this is a short-term credit component where you extend a $30,000 investment via credit on a first lien position in exchange for a $250 a month interest-only payment. Our objective here, once we sell the property, is to give you a first right of refusal that will eventually come available via seller finance of the note. So you'll get first right of refusal of the seller finance note that will likely inadvertently come available on this transaction at $30,250 a month, interest only for a 1-year term, likely to mature within hopefully the next 2-3 months. We'll get this property sold. The availability of this for a end user, they'll pay $35,000, likely put around $3,000 down. If you don't have a mortgage calculator, go ahead and download that real quick as I type in these numbers. $35K. Say they put $3,000 down. They'll have $2,000 in taxes and closing fees, prepaid insurance. Their total monthly obligation is $1,412. So they'll match rent in this 2-bed, 1-bath and actually have some form of qualified equity that they'll be building in a quality, affordable home that we've done new granite, new cabinets, tile backsplash, updated electrical and plumbing, has a central AC unit. I mean, quality, stable, affordable housing in that Mesa market. So that's lot 200 in Fountain East Mobile Home Park. Lot 17, we just closed out. This property's sold. We went over this for the past 2 weeks, and it is now a closed transaction. So this is no longer available. This got absorbed into the fund. For the accredited investors that may be on this meeting today, you could earn a 10% return for a 1-year term paid monthly, or a 12% return for a 3-year term paid quarterly in the fund, Reg D Silvercrest Opportunity Fund. And this meeting is brought to you by Silvercrest today. Lot 116, let's continue the journey here down our open pipeline of seller finance notes. This home is lot 116. It's a 3-bed, 2-bath. And if this buyer doesn't fulfill, we'll be increasing price to $99,000 from $85,000. This buyer is actually under contract currently at $85,000. Sonny, I think you're handling this transaction, correct? Maybe you could just shed some light on this.
I am. It is an $85,000 contract. They have $2,000 in earnest money. They're actually putting $15,000 down. Solid borrower with lots of skin in the game. Always a good option for an investor. The loan amount is $70,000. The payments are $870.46 per month for 20 years.
And I'm just going to go on my mortgage calculator because I don't do this as often as I'd like. At $85,000 with $15,000 down, the total summary over a 20-year term on this $70,000 acquisition for $70,000 on a monthly payment of $870.46 starting here next month. The total interest received is $138,000 over a 20-year term. You literally double your money just in this one transaction with an acquisition here today at $70,000. See some people kind of joining, trickling in. We appreciate you being here today. This is lot 116 currently at $70,000, paying $870.46 a month, $870.46 a month for a 20-year term on quality collateral, an underwritten borrower that is actually closing on this transaction. Again, this is not theory. I do not speculate. Okay, these are literally cash flowing positions that I chef in front of you that are consummated, qualified, and cash flowing, literally non-existent outside of any other platform, likely in the nation. There's some other people that try and that are trying to implement their strategies, trying to get websites. This is up and running. We've done 400 transactions with a low default rate and deserving borrowers in a highly desirable area, the Arizona market, literally unmatched gold out in the market. Does anyone have any questions? I'm just going to air it out.
We can provide collateral files on the documents for these transactions too. It's definitely not theoretical. There are contracts, there are taxes, insurance, credit reports, pay stubs, tax returns, all of it.
So upon request on lot 116, it's definitely a due diligence equation. I don't expect somebody to be like, hey, I like that, send the money. That's not the case. This is all pending due diligence. You'll have 24 to 48 hours to review that. But we put a bow of investment. We provide the full collateral file, which includes the contracts, the promissory note, set up with automatic funds transfer services. The buyer borrower gets an insurance policy with the lender actually listed on the policy. They're park approved and about to get keys. I believe they're potentially closing sometime in the next week. So we're very excited about that, to say the least. Any questions?
Monday. It's closing Monday.
This is for you guys. This is free open air time to be able to ask, your burning desire or burning question. I see a lot of people that join.
I think to review for everyone, and I've actually had questions myself, but how do you roll over from, like, say, a Roth IRA into one of these investment notes?
Sonny Finkel.
So as long as you have a self-directed IRA, you make sure that you have the funding through your IRA company in your account, and you will get a form from your IRA company that has to be filled out that we can do together. They will review the transaction to make sure that it looks like a stable investment, but ultimately you have the decision to determine what you want to spend your money on, and the 4%, stock investment that you're getting is not acceptable, and you want a much higher double-digit investment return, then you get the assistance through our company to help you purchase the note, and it is filed through your self-directed IRA, and you will receive the payments through them.
So
they list the transaction as such and such IRA company for the benefit of Serena Guajardo, however they list it on the asset. And then the title is also transacted that way. And then you'll have the investment in your IRA instead of just the cash that you have sitting there, or the IRA company investing it in whatever stocks or options that they invest in. You choose what you want it in, and you can choose to put it in a note.
So the first step from having a Roth or a traditional IRA is to find a custodian. Directed IRA is great. We work great with directed. There's a few that we don't recommend that will waste your time. So if you'd like that list, we'd be happy to accommodate. What does that mean? That means you have to hire another company to custodianize that asset. So say it's directed IRA, right? You talk with Marcus or Nate over there, and you are ready to get onto the train, right? You have your money in your Roth. you now transfer that money from your Roth into the custodian. You don't take it in your account because that would be a violation of transaction. That goes straight to the custodian. The custodian will have their processes at the end of the day, some fees to pay to set up the account and things of that nature. But once that's done, that could take probably about a week or 2 weeks to now custodianize your IRA, and the IRA custodian will issue, once you've found a note to ultimately invest in, their required documents, and that will take another about a week and a half to have liquid capital in your custodianized account, to getting necessary documents, to funding that transaction. So for someone that's off in the distance with a traditional IRA, Roth IRA, and they're ready to custodianize that asset, that's kind of some of the timelines that we've come to find out. Getting a couple interactions. I think that was a good tip for sure. Let's continue our day here today. Make sure I'm still sharing my screen. We went through lot 116, lot 205. This is a property that I bought from Daniel Rocho, Vice President of Sales and Marketing for Treehouse Group, or it's either Treehouse or it's actually Roots Management. Roots recently sold this park, and we were the individuals that crept in and bought the last 2 brand new homes that they had in their portfolio in order to sell the community. I bought this 2-bed, 2-bath for $44,000. They originally had it listed from the very beginning at $125,000 as a 2-bed, 2-bath, brand new 2023 model, double wide in a family park. And why am I bringing that up? Well, it's currently pending at 104.5, I believe. So we turned it from a 2-2 to a 3-bed, 2-bath. We added a bedroom to make it more desirable. We spent probably $20,000 upgrading this unit from its existing condition to now a 3-bed, 2-bath. And this buyer borrower bit. They are putting, I believe, a $6,000 down payment. It was originally $4,000. In the want for additional skin in the game, we've had them increase their down payment at 104.5 with a $6,000 down payment. Their monthly payment's $1,224.87. Unpaid balance, principal balance, or in other words, your acquisition is $98.5, paying $1,224.87 a month. This will likely close sometime next week. So we've got $200,000-$300,000 in transactions being conducted in 1 week next week. And that's, just a regular week for us. This home's literally never been lived in, warranted, 2023, never been titled, never been owned outside of our ownership. And now we're reselling the property to its new happy buyer. I believe my Spanish-speaking sales associate is the one conducting this transaction. I hired him from Business Network International. Business Network International is one of the largest referral network marketing associations in the world, actually. And we're one of the top chapters, I believe, in the nation. We collectively did about $12 million in business last year. Over the last 4 years, Win Mobile Homes, Mobile Mailbox Money, and Silvercrest Opportunity Fund has received upwards of $4 million in transactions. That's about $1 million a year. Really off the back of this sales agent who I hired, and he's doing a gang of sales. So shout out to Alan. But that's a little.
Alden, we have some questions in the chat.
Let's hear it.
Where is that house located? I'm looking for a property somewhere in the Phoenix area.
Lot 205 is located in Grand Missouri Mobile Home Park. Grand Missouri. I'll just show you a little map here. So
that property is under contract. We do have lots of others available.
Correct.
So, Alexander, are you looking for a property to live in or to invest in is the question.
So just to kind of give you a little lay of the land, some people aren't from here in Arizona. We have properties in Tempe here off like Kyrene and Baseline, off this 143 kind of area. We have properties in Grand Missouri. This property is pending, Grand Missouri here. We have 9 55 and older homes in this area, and 1, 2 in kind of the Phoenix market, North Phoenix, Central Phoenix, and this Glendale area. And not many family parks at the end of the day. Most are 55 and older. So important to, pipe up at the end of the day in order to take something down if it is in a family park. We also have a new acquisition that I just acquired here in the South Mountain market. But major metropolitan areas from Tempe here to Phoenix. We have 116. Phoenix is like right here. We have Grand Missouri in the Glendale market. I've got a 55 and older home here up by Cave Creek. Our Mesa homes are abundant from here, Ellsworth and Broadway, off the 202 to Wrecker and Broadway is about here. We have a lot 200. I just went over. That's that kind of central Mesa market. We have Val Vista and Broadway, which is about here. We have 4 or 5 properties off those cross streets. And then lot 330 in Siena Vistas is about here. So the expansiveness and ability to diversify in this asset class is quite literally unbeatable. You can't match what we're replicating. To have diversification across Glendale, Phoenix, South Mountain, Tempe, Mesa, and close to Apache Junction in single family, that conversation would cost you $50 million. Whereas here, we're doing more for less, making more with less capital at the end of the day. So that was a great one to kind of talk about. Any other questions? Oh, was I not sharing my screen?
No, I was going to say something.
Whoops. Yeah, so I got a couple screens going, but quite expansive across the major metropolitan markets here in Arizona. So let me continue the meeting here. So mobile mailbox money is where we post these notes for sale. When we don't sell them, they do get sold prior to going to the site, but this is where you sign up for the mastermind, and this is streaming live on Facebook, YouTube, and LinkedIn. You can go back and watch all the previous masterminds that we've done over the past year and a half. I think over the past year and a half, our business has doubled in size, and we could do the same thing here in 2027. So Silvercrest Opportunity Fund, our Reg D 506C accredited investor fund. I have 37 positions currently working in my portfolio, unmatched diversification in one of the hottest markets in the nation here in Arizona. Not only hot because of temperature, hot because people still want to move here at the end of the day. All of that transience from California, a lot of New York, a lot of the snowy states in the Midwest, they're moving here at the end of the day. So for us to capitalize on our credit strategy, we require capital investment from accredited investors. We're looking to build this portfolio to a $10 to $50 million assets under management, and that's in pro forma cash flowing notes. I quite literally buy enough notes that I buy a mobile home park in the same asset class and make more money every single year. Hands down, bar none, there's not even a question. You try to go find competitive acquisitions in mobile home parks for an equity multiple. That sounds like a huge lift at the end of the day. We're in the same asset class. We're actually being the bank and cash flowing day one at a higher than average return on investment. Let's continue our meeting here. We have lot 1213. I'm going to just kind of slow it down a little bit because this is a very unique transaction and you'll likely not hear about this outside of any other meeting in the entire nation. And why is that? Well, we've got our hands and our tentacles and our roots out into damn near every single mobile home park here in Arizona. I know that because we're institutionally recognized by CalAm Properties, Kingsley Management, Equity Lifestyle Solutions, Roots Management, Treehouse Group, and quite literally the list goes on. I think we've touched probably the top 20 mobile home park owners in the world. And they know us by name. They know Win Mobile Homes because we're licensed, bonded, and insured. But let's stop beating around the bush here. Okay. Lot 1213. Why is this such a unique transaction? Well, I didn't even own this house. This seller came to us in the want to sell a property. They listed the home here with Win Mobile Homes as a licensed brokerage. They're for sale by owner that listed us as an agency to sell the property. A buyer has come to the table. This buyer is finding challenge in finding conventional financing. Sonny, why is it hard for an individual to finance a mobile home?
Usually because of the year. A lot of the institutional lenders won't lend on the property if it's in the 1970s, which a lot of them are.
How many lenders lend on manufactured housing?
Like 2 or 3.
There's quite literally 3 companies in the nation that provide financing on manufactured housing. You could Google, you may be able to find more, but they'll never get a deal done. I guarantee it. And why is that important to recognize? Because there's a problem. There's literally one of the biggest blaring problems in the affordable housing sector because banks fail or not even interested in the deal flow in manufactured housing because they don't know it. It's not a conventional product. But out of hardship comes opportunity. If we can solve a problem via seller finance within this transaction and provide liquidity to the transaction and make a profit, that's a replicatable process, right? So this home was originally listed at $78,000. The buyer borrower has agreed to pay an increase in the convenience of a seller financed component. But how do we seller finance a home that we don't own, right? We're not going to teach the homeowner to seller finance the home because they don't want to hold the note. They want their money because they want to go buy a house or move or whatever it may be. Well, we negotiate a decrease. We give them a cash offer, right? Actually buy the house. And coincidentally, we've had this under contract at $60,000. The seller is actually paying a commission to our agent, who's Serena. We pay $60,000 for the home. We own that home and double close to the buyer borrower. The buyer borrower agreed to an $85,000 price point. So we manufactured a $25,000 margin. But not only that, now we've created a cash flowing note at a $78,000 unpaid balance. The buyer borrower is putting ample skin in the game. They're putting $7,000 down towards the balance on an $85,000 price point with an unpaid balance of $78,000. Their monthly payment on $78,000
is $1,027.10. $1,027.10 on $78,000. Their entire PITI payment is $1,107, and even with lot rent, their payment on a 3-2 year 2000 1,152 square foot home is only $2,050.
And this is in that South Mountain market. You know, the amount of requests we get for South Mountain is abundant. So we've been heavily acquiring, diversifying in the area, you know, being careful about what we're buying at the end of the day, because it's got to be a risk mitigated transaction. But this is it, people. We do all this work in the want for $1,100 a month on a $78,000 unpaid balance. That's quite literally life-changing acquisitions. You start to stack those or find out and get into the advanced strategies of hypothecation. that literally becomes a step closer to financial freedom with mobile mailbox money. For the people that are raising capital, to stack these notes and give your investors a 6 to 10% return, at the end of the day, there's ample rate and margin within these transactions to start with really one, at the end of the day, people are looking for an alternative. I'll tell you that alternative investments are being Googled right now at rates more than ever. Like if you go on the Google data and whatnot, this is a challenge in the market for investors. Why? To receive a contractual income, to be outside of volatility, and the availability to actually buy a pro forma asset on a public platform. This hits. I'm telling you, if you go talk to your uncle who's got 10 million bucks, who's in real estate, that understands collateral and understands being at the top of the capital stack within that transaction, it's a no-brainer in most cases. Does anyone have any questions about lot 1213? Know that these transactions are likely getting absorbed today into the fund. So quick little claps around for my accredited partners. Next week, we'll likely have more transactions coming to the table. But that's mobile mailbox money. We're giving you a back office view of what we do on a regular basis and the want for additional transaction base, additional diversification, and your capital investment to be in a risk mitigated transaction. Ethan Walker, this is my second time joining the Mastermind. Do you guys have it on any other days? We do not. We do it currently on Thursdays at 1 o'clock every Thursday, but you could go back and view every one that we've ever done on YouTube. We do send that out in our email ultimately as an update. We're getting a lot of interaction today. We appreciate you being here. Know that that's why we do it. I'm going to show you our walkthrough video of lot 1213, vlog 153. I actually did a full vlog on this property. Let's see here. I'm going to leave you on a cliffhanger. I encourage you to check that out, to say the least. So that's vlog 153 on Facebook. Check that out on YouTube as well. I'm going to put my information in the chat as I do. We do have transactions that are going on. All of these notes after this meeting are being absorbed into the fund. My fund has like 27 to 37 positions available at any given time. You could invest and partake in a per unit owner share in my portfolio, bank quality stability, life-changing contractual income, or I could sell you one note to one investor at $1,000 above unpaid balance and the daily interest. So depending on how long it takes to transact that transaction. So, Sean, if someone didn't want to buy a 20-year note, what non-accredited strategy do we usher towards them? What is that?
Of course, mobile mailbox money to buy one of our notes, existing notes. Yes.
So they could buy a whole note for the full 20-year term, or they could partake in hypothecation. Hypothecation means to pledge an asset in order to garnish capital investment. and we pledge it at a 1-year term, giving you 19 years of liquidity and manage that transaction in a really passive component. Not everyone's a node investor. Some people are just an IRA investor and they want to go live their life. Some people just have capital that they got paid off from a single family residence and they're finding challenge in finding cash flowing residential real estate. Why? Because it's non-existent literally in the marketplace. Unless you're in the business buying wholesale at a below market value, it just doesn't exist. You could get a 1-year term, bank quality stability, hitch your cart to a qualified operator, and get a double-digit interest only monthly payment. And that's items that people have utilized for their own relationships at the end of the day. You know, multiple individuals have come onto this meeting and hit with personal relationships because they have access to benchmark deal flow. These deals hit benchmarks, and that's why it makes it bank quality. So that's one step closer to financial freedom. What do we call that? Mobile mailbox money. So appreciate you all being here today. You know, we're extremely excited to say the least, and we do this all for you. You guys have a huge impact. You don't realize the impact that you have with every single dollar that gets invested on this platform. We're quite literally changing every single life that we transact via a door, a homeowner, and a new family. You know, with the average age of a first-time home buyer being above 40 years old, there's literally no other alternative. Unless labor, material, and asset prices drop 50%, there's literally no other option, and we're cultivating that corner of the market in a Warren Buffett investment strategy. Appreciate you all being here today. We'll see you next week. See you at the Monday ASREA meeting at 6 o'clock in North Scottsdale, located at Venue 8600. All you got to do is Google Venue 8600, and Silvercrest is actually the main corporate sponsor of one of the largest real estate investment associations in the nation. Co-branded, official, trustworthy, you know, risk mitigated. You literally can't find another opportunity outside like this outside of our platform. We appreciate you being here. See you next week.